And maybe these first few phases are testing and challenging the chains to be able to handle the volumes that are coming.
Alrighty, everybody, what is going on? Welcome back to another CYPRX video banger. In today's video breakdown, we're going to be diving down the rabbit hole, showing you all fundamental developments that never reach the mainstream, that show you guys that large market participants like Quant, Ripple, Stellar, Hedera are all being finally integrated into the back end of the financial infrastructure, helping build out this new digital system. And it is all about to go live on public blockchains. People just need to be patient, pay attention to detail, and lock in. So in today's video, we're going to be diving into some fundamentals. If you all enjoy, do me a favor, smash that thumbs up button and subscribe. We're going to be jumping into some Quant developments, Ripple developments, show you all how in those developments Hedera and Stellar are thrown in there in the mix, and then we'll end the video note on XLR. Okay, so we're going to start here. First, I want to play a video clip of an industry-leading expert from JP Morgan going on to talk about how eventually, when regulation is clear enough, they plan right now to build out the system in such a way so that way when regulation is clear, they can move over smoothly to public blockchains. They've been telling you guys for the longest time now that this is happening, and I'm going to show you all in the documents that this is still going on right now so that people don't lose faith. They understand the trajectory of this market landscape once all these things really fully come into fruition. This is a massive opportunity that people are sleeping on because they lack patience, they lack conviction, and they lack the ability to do this type of research. So pay attention. Listen to what this gentleman says here.
We are very much on the private permissioned end of the spectrum today. And so we get the question a lot of times, like, why even do this on a blockchain network? Like, can't you just do this with a database or using like your real-time payment setup? And for us, we do see a future where a public blockchain fully realizes its potential. And so the way that we look at the world is like, let's build use cases today using this technology, using Solidity, which is Ethereum's programming language. And from time to time, we do these experiments where we can deploy what we built onto public blockchains to ensure that we're doing it in a way that, should the time come where we eventually want to migrate, we can do so in a pretty smooth manner. And so that's kind of our approach, is this kind of building in parallel piece where we start with,
when we can move over, when regulations allow, we can do so in a smooth manner, right? Move over to public blockchains. Let me show you guys that this is happening for a fact right now as we speak. So since we're on the topic of an individual representative from JP Morgan, let's first cover this document. Pay attention to key vocabulary words: integration. This is a document in collaboration with Connexys and JP Morgan, designing payment tokens for safety, integrity, interoperability, and usability. And we're just going to read the introduction here. It says, public blockchains and the financial services industry have been converging as financial institutions explore blockchain and DeFi concepts. Remember, we have talked about how they are integrating DeFi into the core of the banking infrastructure so that way we can generate yield on things like stablecoins or CBDCs or other digital venues right now in this new digitally native ecosystem, okay? DeFi concepts and their products as applications on public blockchains incorporate enhanced governance practices from the regulated world. As a general understanding and perception of blockchains improve, and as regulated financial institutions grow more comfortable with decentralized technologies, this convergence is shifting towards integration. You guys see that key vocabulary word right there, integration. Okay, that's important. Remember that in just a second when we go over these quant developments. Financial institutions are moving beyond single operator private permission blockchains to more open blockchains. We use this term to refer to public permissionless blockchains as well as permission blockchains that are open and accessible to a large number of financial institutions. Open permission blockchains have been gaining interest in the form of concepts such as unified ledgers, the Finternet, and global layer ones. This shift towards integration is driven by a growing recognition of the value shared platforms and potential for seamless integration. That's the third time they've mentioned integration of financial services to drive efficiency and liquidity. So I'm showing you all how they tell you guys this stuff in their documents. Well, what did Quant recently announce? I know people complain because Quant deleted their Twitter, but they are super active over on LinkedIn. 7 hours ago, as of time of recording this video breakdown, it's May the 6th. They said here, on Monday, May 5th, the European Central Bank announced that Quant has been selected to work on the ECB's digital euro project as a pioneer partner. Let's dive into this development, keeping in mind that keyword integration and what that gentleman from JP Morgan said about once the regulatory clarity is in place, they'll be able to move over smoothly to public blockchains. So we're not going to thoroughly read this entire thing. This is the report, May 6, 2025, on the quant.network website. And if we come down here, it says Quant's pioneer role will focus on embedding our programmability capabilities, testing conditional payments with the ECB, and embedding programmability at the wallet layer. Using our existing programmable payments technology linked to the ECB's digital euro services platform, we will enable conditional payments in the digital euro in a P2P marketplace use case. As a part of this, we will implement our multi-party lock technology, demonstrating how we can enable secure transactions by pre-authorizing and locking funds until specific conditions, such as delivery of goods in this case, are met. Once verified, payments can then be seamlessly transferred, ensuring smooth, there's another key vocabulary word, smooth and risk mitigation transaction flows.
Should the time come where we eventually want to migrate, we can do so in a pretty smooth manner.
We are delighted to be part of such a visionary project that leverages our patent technology and tried and tested capabilities to showcase how the digital euro can enable seamless and secure P2P transactions in real-world scenarios. You all remember that one JP Morgan representative that sat on stage that talked about how right now, maybe everything that's happening are tests to prepare for what's coming.
And maybe these first few phases are testing and challenging the chains to be able to handle the volumes that are coming. I think this is going to be more transformational on financial services and people's lives than the electronification of the equity markets, the electronification of the bond markets. Those took decades. This has an ability to massively accelerate transformation, and that's the beauty of the technology.
Well, let me show you guys that it is exactly what is happening. So here is that list, right? Here's the announcement, 5th of May, 2025, ECB partners with private sector through digital euro innovation platforms. Keeping in mind what the JP Morgan representative said in the document from 2025, this one right here, right, that we just went over and read, where it mentions integration 3 different times, okay? You cannot make this stuff up. If we come right over here to this announcement, it says, pioneers will be exploring how to integrate the simulated digital euro interfaces with their platforms. The ECB is providing participants with technical support and specifications, such as an application programming interface, to conduct independent work on use cases of their choice. Pioneers will summarize their findings in a report, which the ECB will review thoroughly to inform its work on the digital euro project. This is huge. And if we come up here and we click the 70 market participants, it takes us over to this page. And if we scroll right down here, you can see that Quant Network is listed right there. Okay. Huge, huge development, showing you all that they are for a fact building out this new system in order to integrate and smoothly transition over to public blockchains when the environment calls for it. Okay. Let me show you guys continued development. So we have this announcement from the OMF IF Digital Monetary Institute. Well, let me show you guys that Ripple is heavily involved, Stellar is heavily involved, and so is Hedera. Okay. So it says, at the World Bank International Monetary Fund spring meetings this morning, we brought together central banks and policymakers to tackle one of the most pressing questions in digital finance. What does the rise of stablecoin mean for the future of money? Keeping in mind, the gentleman whom I just played a video clip of talking about earning yield on your digital assets.
Connect your account through Plaid or whatever interface they have, and then move that money, which ACHs and takes a day or two, and then you can trade it. Maybe there's even another day before you can trade it. So you're talking about money coming in 2 days a month, taking 1 to 3 days for you to take that money and then be able to invest it in the market. That's lost economic value, right? Those few days. Imagine if your income is streamed to you daily. Imagine that you can borrow against future income. Imagine that the second that you have money, you can go buy something with it. And the second you sell it, you can go buy something else. That your money is earning yield that entire time. And then, as Stacy said, imagine taking assets that are yield generating and being able to use those as payment and settlement for goods and services. We call this PayFi, and we really think this is the future of financialization.
Well, do you all remember the gentleman from the Stellar Development Foundation talking about having your cash sitting idle is literally just losing you money, and how you should be earning yield on your idle stable coins? Okay.
Stable coins we're going to see, the more competition there's going to be around, how much yield and how distributed to the users. And so I think this place where we're at right now, where there are a bunch of stable coins and functionally they're doing the exact same thing, I don't think that's going to stay for long. And, people are realizing, I made this equivalent for like a checking account earlier. If you're just holding dollars and not getting yield on them, you're effectively losing money, right? So if you want to be a participant in the on-chain economy, you want to have a way to park your money in a way that generates yield. Yield-bearing stable coins are the way to do that. And there's going to be a lot of competition with that space.
In this document, they discuss promising faster, more inclusive and efficient payments, but also challenges around avoiding fragmentation and ensuring regulatory consistency and maintaining oversight. And if we click right down here, it gives you a full transparent list of who attended this closed door roundtable, all right? And so we can see, just scrolling down, we have industry leading experts from Ripple, from Circle, from Stellar Development Foundation, from EMTech. EMTech, right? This lady right here in the picture, if you guys remember, announced that they're utilizing Hedera technology on their platform.
So the really simple decision was to say, focusing on modernizing central banking infrastructure. And on one side, we look at the regulatory aspect of it, because come to find out, when we talked about CBDC, regulation comes right after when it comes to adoption and implementation. So we saw that as an opportunity to say, if we can help central banking modernize, then the Visas of the world and the ecosystem can really have a modern infrastructure to provide merchant services and better consumer services around that. So we're on the infrastructure end, and we build an API-led model. We leverage a distributed ledger technology that allowed us to make the case around trust. We made a bet on public ledger. We selected Hedera. That's one of those unique principal choices that we did as well.
If we scroll right here, you can even see the gentleman's logo that mentions Stellar. Okay. And then if we come over here to that list of participants, we can see that there are industry leading experts from Ripple, from Stellar that, attended this event. This is, again, a massive development. Here you have the policy lead at Stellar Development Foundation right there. You just can't get any more clear than this. You don't see let's say that there's 50,000 cryptos in the market, right? There's more than that, obviously, of course, but you don't see 50,000 cryptos on these panel discussions talking about regulation, talking about developments, integrating blockchain and digital assets within the back end of the financial system with these central banks. Who do you see? You see Hedera, you see Quant, you see Stellar, you see Ripple. This stuff cannot be ignored, okay? If we continue to move on, let's go down the rabbit hole a little bit further. Here we have another event that Ripple participated in, actually hosted this event, if I'm not mistaken. It says here, this was posted by the co-founder at Stablecoin Standard just 5 days ago. The Stablecoin Standard and Global Digital Finance Breakfast Roundtable hosted by Ripple and the perfect mix of regulators from the Virtual Assets Regulatory Authority and the industry leaders from the likes of Standard Chartered, MasterCard, Fireblocks, and Anchorage Digital, along with Zodia Markets and Tether, and of course, Ripple, hashing it out on various global policy frameworks to do well, and so that policymakers and industries can collaborate more closely to make the environment better. So again, Ripple sitting in on these closed door roundtables. And last but not least, we have this one right here. This is another recent roundtable that just took place. The Digital Pound Foundation posted this on their LinkedIn profile. At Innovate Finance Global Summit 2025, we were delighted to host a private roundtable yet again with Coinbase, Circle, and Ripple to discuss the future of stablecoins, interestingly enough, okay? But something that I liked about this one is that they don't mention that Gilbert Verdian from Quant attended this event. But if we can see right here, right, when you're clicking through the pictures, you can see that Gilbert Verdian is sitting right there at the end of the table. All right, sorry about that. I don't know if I can zoom in enough for you guys to see, but he's right there, right at the very head of the table. So you got Ripple sitting on this closed door meeting. Okay, you got Circle sitting on this closed door meeting. You got Quant sitting on this closed door meeting with policymakers from the Bank of England and the HM Treasury, along with the Financial Conduct Authority. And then at another panel discussion, showing you guys again that they are in bed with each other here, you have same market participants. You got the likes of Quant. You got the likes of individual representatives from Stellar, from Ripple. And then you have organizations that have partnerships with Hedera sitting all at these roundtables. Okay, you cannot make this stuff up. This is the stuff that the mainstream is never going to show you guys. So to wrap up the Ripple, Stellar, Hedera, and Quant spiel, here we have the Dubai FinTech Summit coming up. Ripple joins Dubai FinTech Summit 2025 as a platinum sponsor. This is going to be taking place between the 12th and the 13th of May, 2025. Definitely going to be some very interesting insights from this event. As of time of recording, it is the 6th of May. Now let's transition. I want to also show you guys how XLR is playing a massive role in this. Now we've shown previous video breakdowns how they have tested XLR. We also have industry leading experts at the same panel discussion, right? This gentleman from JP Morgan sitting on stage with other financial institutions mentioning how they utilized and worked with XLR.
Go ahead.
Can I add to that? So you do, because you're a bank and you're regulated and you can't work on public right now. But what are you doing in Singapore right now? You working on a public chain, or doing examples on public chains?
Yeah,
example,
I think
testing?
you're referring to the Project Guardian initiative, and that kind of goes right very nicely with like the interoperability point that Annalise made. So yeah, I mean, we've explored like what it would look like to use some very crypto native interoperability protocols to connect to Anthony's network, as well as Avalanche using Layer 0 and XLR. So we have done that work. Those have gone well, but again, like our live app.
So you heard the gentleman mention that they have utilized XLR. I want to take your attention over here to this fundamental piece from Zonix. Now, Zonix is a global fintech leader at the forefront of real-world asset tokenization and works with financial institutions in this space to help unlock new opportunities for institutional investors and asset holders worldwide. And they put out this little tiny fundamental piece here, and it just goes on to talk about who's already in. UBS, Goldman Sachs, HSBC, JP Morgan, World Bank, European Investment Bank, Franklin Templeton, KKR, and more institutions are going digital. Are you? Then down here, it talks about how the future of equity is programmable. And here is that key word right there. It says liquidity superpowers. What about liquidity? Can these tokens be used as collateral? And then it says, yes, tokenized assets bring collateral mobility, 24/7 trading, and DeFi integration. There is that key vocabulary word yet again, integrating. They are integrating these digital solutions, these public blockchains into the back end of the core financial infrastructure. And so many people are about to miss out on a huge transfer of wealth because they lack the patience and understanding of what is taking place. Here's also a post from XLR that just came out a couple of days ago, and it reads, institutions are recognizing that tokenization represents a transformative opportunity. 24/7 market access, literally, it's identical to what is written on the Zonix white paper here, whatever this is, this little PDF from 2025 talking about, everything that's happening in the space. Okay. They use the same vocabulary. The ones that are in the know, they use the same stuff. Fractional ownership, enhanced liquidity for traditional illiquid assets. What does this say? Liquidity superpowers right there. Okay. And you heard the gentleman mention that they utilize XLR, programmable functionality that automates complex processes. What does this say up here? Again, same key vocabulary. It says the future of equity is programmable. For investors, this means greater portfolio diversification and access to previously inaccessible asset classes. For markets, it promises increased efficiency and transparency through automated settlement and compliance. However, a critical challenge stands in the way of realizing this potential: market fragmentation. The report by Baker McKenzie and Deutsche Bank emphasizes that the assets created on each blockchain tend not to be natively interoperable between different chains, creating siloed liquidity pools. The fragmentation significantly reduces markets' efficiency and prevents tokenized assets from functioning seamlessly. XLR is recognized in the report as a battle-tested technical interoperability solution addressing this exact challenge by providing the essential infrastructure that enables secure routing of transactions across different blockchain networks. The foundation needed to unlock tokenization's full promise is realized. And here is that document directly from Deutsche Bank and Baker McKenzie. And if we type in the terminology XLR just to go in and read what it is they're talking about here, you can see, just scrolling down to page 12, it says, today's tokenized market operates across multiple blockchain networks, and assets created on each blockchain tend not to be natively interoperable between different chains. This fragmented access and liquidity reduces market efficiency and limits the ability of tokenized assets to function as seamlessly as new digital securities. First, technical interoperability is required, and there are already battle-tested solutions like XLR Network, initially developed by Interop Labs and its peers. These are yet to be fully adopted by the broader financial industry and regulators as available and trusted utility infrastructure, just like the Internet Border Gateway routers that routes internet banking messages across different networks to facilitate regulated financial transactions moving across different chains. This is massive, right? This is physically telling you guys from an institutional perspective in a large consulting firm that XLR Network is a battle-tested solution. And you heard individual representatives from JP Morgan mention that they're building out the system in such a way that when regulation is clear, they can easily and smoothly transition over to public blockchains. So with all of that in mind, physically showing you guys that they are for a fact starting to integrate these solutions into the back end of the core financial system. These large organizations like Ripple, Stellar, Adara, Quant are all sitting in on these panel discussions with regulators, with central banks, discussing and talking about these ongoing topics. You cannot get any more clear than this. As always, none of this is financial advice. Make sure that you guys do your own personal research. I'm not telling you all to go out there and invest in any of these digital assets. Always assess your own personal risk properly. But for sure, bringing you guys some of the realest information in the game. If you enjoyed, smash that thumbs up button and subscribe. And with that being said, I'll see you all in the next video breakdown.